Hi, I'm Andrew Lockhart from Metrics Credit Partners, and thank you for joining me today. The Metrics Credit Partners is a business that we set up back in June of 2013, really as a result of our experience coming out of the global financial crisis and seeing the impact that experience had on Australian companies and the way in which they were able to access financing. So Metrics Credit was established as a business that would seek to originate, to structure, negotiate and provide financing to Australian companies alongside and in competition with the banks. Since we launched our first fund in June of 2013, the business has grown. We now operate a range of funds that are designed to provide investors with a choice. Really, an investor can choose across our funds based on what is the investor's unique requirements around their return objective, how much risk they're prepared to accept, and what liquidity do they require in their investment. We operate a range of wholesale funds, and we have 2 ASX listed vehicles. The business has grown in terms of people, so we have around about 60 people within our business, with offices based in Sydney, Melbourne and in Auckland in New Zealand. The skill set of our team is very much around the direct origination of transaction opportunities with borrowers, so finding opportunities to lend to companies. We do that through our relationships with borrowers, and that really covers borrowers that are operating ASX publicly listed companies. We're an investor in project and infrastructure related funding facilities. We're an active property lender for development purposes, say land subdivisions, medium density or residential high rise. And we also provide a range of acquisition finance facilities, predominantly to Australian private equity firms. In Australia, we have a very immature debt capital market. Most Australian companies are unrated. Most Australian companies are heavily reliant on banks for funding. Their ability to access institutional investor capital through the issuance of a bond is quite restricted. And so the opportunity for us has been to raise investor capital, to use our networks and experience to originate transaction opportunities and then provide financing to Australian companies. We think it's a very important source of non-bank alternative debt financing for companies to help companies to grow, but equally it provides a unique asset class for investors to gain exposure to. When we think about our activities, we really span the full spectrum from very high investment grade through to sub-investment grade, but our funds also provide a means for investors to gain exposure at different parts of the capital structure, so from senior unsecured debt through to equity. And that's designed to provide investors with a different risk and return outcome. The asset class is quite unique. Obviously it's a private market, so we're privy to information from borrowers that is not publicly disclosed. That information allows us to complete very detailed due diligence in relation to the operations of the company, and we use that information to negotiate and structure terms and conditions, imposing controls on companies' activities to mitigate any downside risk. The exposures tend to be short dated, and we prefer to do that because we believe that it lowers investors' credit risk, it lowers investors' market risk, it drives enhanced liquidity across our underlying pool of assets that we hold in our various funds, which actually drives economics and returns for investors as you charge borrowers fees or refinancing fees. The underlying loan assets are predominantly floating rate, and so obviously fluctuations in the base rate will impact the investor's total returns. So if interest rates rise, investor returns go higher. If interest rates decline, obviously the investor's total income would reduce. But unlike a fixed rate bond, the capital value of the asset remains relatively stable. The assets are income generating. Obviously borrowers are required to pay their interest and fees in priority to other distributions or payments that are made to service their debt. There are a range of things that a lender does to limit or restrict the volatility of the asset class. And so the covenants and controls are designed to give lenders early warning signs or triggers if things were to deteriorate. And all of those sorts of things are designed to really give investors protection to downside risk of loss, really reflecting where you sit in the capital structure. And so obviously investors invest in the equity asset class to participate in growth in earnings and growth in capital value. They participate in lending activities because they want a lower risk of volatility. They want the equity asset class to really wear that first risk of loss, but also as a result of providing a lower risk part of the capital structure in the form of debt, investors are rewarded with a coupon or an interest payment or fees. And so the income that's generated for our investors from our activities comes from the fees that we charge to borrowers, the interest rate that is charged to borrowers, less costs delivering the net operating income to investors. We have 3 vehicles that are available for broad distribution to investors. The first vehicle was the MCP Income Opportunities Trust, or MOT. That fund was designed to provide investors with an alternative means to generate income from debt as opposed to holding a portfolio of equities. So MOT was designed to give investors access to private credit investments where we could generate an acceptable income for investors, but also provide investors with downside protection as a result of investing in the debt. But through our skill set around negotiating outcomes with borrowers, hopefully providing investors with a means to participate in capital gains. That fund seeks to deliver investors with a minimum cash return of 7% per annum, with participation in upside gains into the mid-teens or early teens. The other vehicles that we operate, which are designed to give investors an asset allocation that may solve for an alternative to traditional fixed income. So when we launched the MCP Master Income Trust, or MXT, to the market, that fund was designed to give investors an alternative for their more defensive part of their portfolio. We formed the view that investors really were starved for alternatives, and they had opportunities to invest in instruments like hybrids, term deposits, or the occasional corporate bond that may have been issued. But there was no means for them to get direct diversification to the broad market or the Australian corporate market as a result of most of the lending activity being undertaken through loans that are held on bank balance sheets. So through MCP Master Income Trust, or MXT, we sought to provide investors with a relatively capital stable, low cost, predictable income vehicle that was tradable on the exchange. That fund seeks to deliver investors with the minimum return of the RBA cash rate plus 3.25% net to the investor. Both of the funds, MOT and MXT, pay income to investors on a monthly basis, and investors can buy and sell those units on the stock exchange, giving them the necessary daily liquidity if that's what an investor requires. And so MXT and MOT, whilst providing investors with diversification and access to a market and the flexibility to buy and sell units on the exchange, there are investors that don't value and don't want to be exposed to the risk of secondary market trading of their units on the stock exchange. And so we've launched a retail version of MXT, being the unlisted version. And that fund is called the Metrics Direct Income Fund. It again seeks to provide investors with exposure to a more defensive asset class, from investment grade through to sub-investment grade direct loans to Australian companies. Income in that fund is to be paid to investors on a monthly basis. It's not traded on the stock exchange, so investors may have the ability to reduce the level of market volatility in the traded units. Those units can be acquired through platforms or through the download of a PDS on our website. And that fund seeks to provide investors, again, with the minimum target return of the RBA cash rate plus 3.25 net to the investor, with that income paid monthly. And we believe it's an important alternative source of income for people, particularly in an environment where dividends are being cut and restricted and interest rates are at all-time lows. I guess the highlights of the fund, I believe that Metrics has an experienced and qualified management team that have the skill set to be able to directly originate loan transaction opportunities for our investors, providing that important source of alternative debt financing to Australian companies. The fund seeks to provide investors with a great level of diversification across a range of companies. Obviously, counterparty credit risk is a material risk that an investor would be exposed to through credit. So having a well-diversified exposure with a lower risk against any individual counterparty is a key means to lower risk for an investor. The fund seeks to provide investors with monthly income, and importantly, investors can have liquidity in relation to their investments on a monthly basis. One of the important things we've seen is we invest in a less liquid asset class. The loan assets that we invest in are not tradable over a screen. They're not listed entities or listed investments. But importantly, as our funds have grown and the size of our business has increased and the funds under management has increased, it's starting to provide us with a range of alternative options to enhance the liquidity that we make available to investors. And as a result of that, with the Metrics Direct Income Fund, we're pleased that we're able to offer investors the rights to redeem or gain liquidity in their investment on a monthly basis. We've sought to provide investors with a capital stable, predictable, regular monthly income vehicle where investors are gaining direct exposure to Australian companies through the provision of debt financing. Well, that about wraps up some of our activities. Thank you very much for the opportunity to present to you today. If you'd like any more information in relation to any of our funds or metrics activities in the market, please feel free to contact us via our website or use the contact button located on this website.